If you are still struggling with the ICT Silver Bullet, make sure you guys watch this video to the end. As ICT said himself, there is no better setup than this strategy right here, and it forms every single day. These are not my words, these are ICT's words himself. You can quit your job and become profitable from this one strategy alone. So what makes this strategy so fantastic? I'm going to give you guys a whole step-by-step breakdown in this strategy, how you guys can trade it and how you guys can reap the benefits of this strategy. So in today's video, I'm going to include a full ICT strategy for the Silver Bullet, a step-by-step breakdown. You guys are going to fully understand this if you guys watch the video to the end. So make sure you guys watch the video to the end so you guys know what you're missing out on in order to be profitable with the ICT Silver Bullet. As I see a lot of people complaining on the internet that the ICT Silver Bullet doesn't work or it's not profitable. Yes, it is profitable. You are just doing it wrong. So, and then I'm going to end the video off with some real market examples. So let's get into it. Guys, I won't even take a minute of your time. However, if you are still not a funded trader and you want to get funded, I have an amazing opportunity for you guys. I will pass your funded challenge 100% guaranteed or all your money back. Now, you do not pay a single penny until I get you funded. So it's absolutely zero risk for you. And if we do somehow fail your challenge, which we have never ever failed a challenge before, we will refund every single penny you paid us, plus every single penny you paid for the prop firm. So make sure you guys join the link. It will be join the group. It will be the first link in the description. I have so much proof of me passing people's accounts. How many more people do you want to see get funded every single day? People are changing their lives. People are making thousands of dollars in payouts. So what are you waiting for? Now, for those of you unfamiliar with the ICT Silver Bullet, the ICT Silver Bullet trading model is a time-based trading model that focuses on liquidity sweeps, market structure shifts, and fair value gaps for extremely high win rate. Now, what do I mean by this? So the ICT Silver Bullet only happens on a 1 hour time window on a few sessions per day. So now, what times can you trade the Silver Bullet and what pairs? So firstly, adding on to my point from earlier, a few sessions per day, we do have the London session and the New York session, and there's also a PM session. However, do not trade the PM session. From my back testing, it is way worse in comparison to the New York session and the London session. So I heavily recommend you guys stick with these two sessions. So for the London session, it's 3 to 4 a.m. New York time, 8 to 9 a.m. UK time. New York session, 10 a.m. to 11 a.m. New York time, 3 p.m. to 4 p.m. UK time, which is great times. It's very accessible throughout the day. 3 to 4 a.m. not so much, but you still can trade the New York session if you are in New York. So moving on to pairs, EURUSD, GBPUSD, and NAS 100. Now, I recommend you guys backtest the pairs for yourself and see what you like and what works for you. Now, this is what I have backtested and this is what I found the most success from. So I recommend you guys stick to these pairs. Moving on. Alright guys, now I'm going to be going into a step-by-step breakdown. A very simple 4-step plan for the ICT Silver Bullet. It will include everything you need to know, so make sure you guys watch it fully. Starting with our step 1, our liquidity sweep. Now, we simply want to wait for market to take our liquidity. Now, what does this mean? I have listed key liquidity levels down here. These are all valid levels for market to take to be considered a liquidity sweep. Now, I just want to add, guys, this liquidity sweep does not have to be in the kill zone. What do I mean by this? Now, our kill zone is our time delineation, whether you're trading New York session, London session, 3 to 4, 10 to 11. Now, that is your kill zone. Your kill zone is simply there to say when you can place a trade. If market is not in your kill zone, you do not place a trade. However, everything else can happen before. And to add, if you get a liquidity sweep to the downside, you want to look for longs for buys. If you get a liquidity sweep to the upside, you want to look for sells. In this example, we've got liquidity taken to the downside, so we are now looking for buys. This brings us on to our step 2, which is about our market structure shift. Now, we simply want to wait for a market structure shift with displacement. Now, a market structure shift without displacement is a weak market structure shift, and I'd never ever take a trade off it. Now, as you can see in this diagram, we've had our liquidity sweep right here, and as you can see, we've had a valid market structure shift. I'm going to explain to you guys why this market structure shift is valid. As you can see, we were in fact bearish. However, we did get a change in momentum. As you can see, we have a change in momentum. Market starts moving bullish. This is our market structure shift. And as you can see here, what makes it valid is that the body of the candle closes above the swing high of this candle, which makes it valid. If it does not, that's again a weak market structure shift, and I would not consider it valid. So just to add, guys, displacement shows that market is moving with a lot of volume in inside direction. Now, how can we see that on the chart? We can see strong big candles like this, as you can see. Big candles, candles with a lot of volume. And if I probably brought up the volume indicator here, it would be a lot more clear for you guys, and you'd understand what I'm speaking about. Okay, guys, so step 3 is about our BPR. What is BPR? Balanced price range. And what is a balanced price range? Basically a double fair value gap. Now, where other people would say look for your fair value gap, I say look for your balanced price range, as it adds more confidence to your trade, and it's how you get a higher probability setups from the silver bullet. So as I said, it's a double fair value gap, and I've even left you guys an example. As you can see, we've had one fair value gap right here, and if you guys do go on the 3-minute, this will be clearer. However, there was another fair value gap right here. Now, where the fair value gaps overlap, that is our balanced price range. So I would mark up my 50% of the balanced price range and simply place my limits from there. Now, if you guys don't understand, don't worry. I will be showing you examples on TradingView later in the video, so make sure you guys stay tuned, and I will be going in more depth to help you guys understand. Just to reiterate, balanced price range, simply double fair value gap. As you can see, we have a fair value gap here, and you want to look for a fair value gap behind it. So, and where it overlaps, that's your balanced price range. As simple as that, guys. Now, this brings us on to step 4, which is all about our entry. Now, as I said earlier, you want to enter at your 50% mark of your fair value gap and wait for market to enter your limit or enter your zone, as I said. Now, what does this mean? You want to place your order on your MetaTrader or wherever you place your trade. Place your market, your buy limit, your sell limit. Simply step away from the trade, wait for it to hit your zone. Now, you want to place your take profit at opposing liquidity levels. What is this? If you guys go back to step 1, I have a list. Any key liquidity levels you want to target equal highs, equal lows, whatever. Stop loss above a swing high or low. As you can see, my stop loss is above this swing low right here. This is just to be safe. Let your trade play out, guys. Don't make your stop loss ridiculously tight, like 2 pips, 3 pips. Be realistic, guys. You want to be capturing real profits in the market, not being flashy. You get what I mean? So, okay, guys, I've all said, I'm going to be going into some real market examples. I hope you guys understand with the step-by-step breakdown I've provided for you guys. If not, just leave some comments in the questions. I'll make sure to answer them for you guys so you are up to date and you understand what is going on. And with further ado, let's get into it. Alright, guys, so I'm on the Nasdaq currently, and I'm going to be showing you guys one silver bullet example on the Nasdaq. As I said, it does work on the Nasdaq, and it also works on EURUSD and GBPUSD. So I'm going to start off by showing you guys the indices side of the silver bullet. So to start off, I'm going to show you guys how well this trade was. It was a nice 1 to 4 we caught it for. However, if you did hold, you could have caught a nice 1 to 6.5 about. So obviously we took our final take profit here. So I'm going to remove everything off my chart, and I'm going to replay the market to before it hits our zone. Now, I'm going to give you guys a breakdown of what I see. So to start up with our step 1, we want to see a liquidity sweep either to the upside or downside. Now, let's just play at market and see what we get. Boom. You guys can clearly see we do get liquidity taken to the upside. Now, why is this valid? This is an equal high. So retail traders will be looking to trade resistance of this equal high, placing sells here. However, market takes them out, hitting their stop loss, using them as liquidity. That's just the concept of liquidity. That's something very simple. Moving on. Now, once we've taken out liquidity, we want to start looking for a market structure shift. Now, a market structure shift does indicate a change in trend, a reversal. So now, carrying on, we're going to wait for our market structure shift. So let's play out the market. And we are waiting for a market structure shift to indicate a change in momentum in the market. So let's play out market. And as you can see, we clearly get a change in momentum. As you can see, higher low, higher low, higher low, higher high, higher high, higher high, higher high, higher high. However, now we start to get a higher low, and we get a lower low as well formed. So this is our market structure shift. It indicates a change in momentum in the market, a change in structure. So I'm going to mark up my market structure shift for you guys. So from here, I would simply be looking for my entries now. As we have gotten our market structure shift with displacement, I want to look for my BPR, my balanced price range, which is essentially a double fair value gap. So if I play out market one more candle, you can see we do get a lovely fair value gap right here now. And if you guys look right behind it, we do have another fair value gap, which forms a balanced price range. So the overlap area is our balanced price range. So from here, I would simply place my limits onto the balanced price range. As for stop loss, above the swing high, you don't want to make your stop loss too tight. You want to be realistic, guys. You don't want to risk getting stopped out and the market reversing and going to your original or your desired direction. So stop loss above the swing high. And as for take profit, you guys do want to target a minimum of 10 handles for this strategy on indices, and it is 15 pips on Forex. So I do recommend you guys also partial. So first partial could be here, second here, third here. This is our final take profit zone. So got a nice 1, 2, 3. So let's go back to the 2-minute. And as you guys can see, we're going to play out market. And while we're waiting for market to hit our area, we are not going to touch the trade. We are not going to adjust our stop loss. We're not going to adjust our take profit. We're not going to enter our FOMO. We're not going to let emotions get involved with our trading. So let's play out the trade and see how it goes. Now I'm going to speed this up for you guys. But as you can see, we do hit for the full amount. Now it's an amazing trade, guys. If you literally stick to your rules, you can catch trades like this every few days. ICT says this strategy forms every single day. So make sure you guys are looking out for it every day, each session. I guarantee you guys, if you stick to this one strategy, you can make amazing profits on your funded account, your prop firm, anything you desire. So let's move on to the next example. Alright guys, I'm on USD currently, and I'm going to be breaking down another silver bullet example for you guys. This is now on a Forex pair. I did it on the indices, now it's a Forex pair. So to start off, I'm going to be showing you that this trade hit for 25 pips. Now on Forex, you want to target a minimum of 15 pips, sorry. So a minimum of 15 pips. However, this does not mean there's a max. So my final take profit hit for about 25 pips. Well, now it's 1-to-3 risk to reward ratio. So I'm going to remove all drawings of my chart and show you guys why this trade was successful. So let's replay the market. And here's what you see on the market. So now we do get a swing low right here. Now market could either take liquidity to the upside or downside. So let's mark out our significant highs and significant lows and see what market decides to take. So if we play out market, boom, we can say we do take liquidity to the downside. So I'm going to mark that out for you guys. Okay, so now we've taken liquidity to the downside. This does signify we do want to start looking for buyers. However, before we do that, we want to see a market structure shift to confirm that market does want to move in the desired direction. So let's play out market and see what it does. Now we do very clearly get a market structure shift right here. And as you can see, we do move with displacement. As you can see, the volume in these candles, big candles, big candles. Now the body of this candle does close above the high of this candle, signifying is a strong market structure shift, which we will take as a valid market structure shift. So now if we hop onto the 3-minute, I can see a lovely fair value gap right here. However, we are still not in the kill zone, so bear that in mind, guys. We are not in the kill zone. So let's play out market and see what it does. Now we get into market. Let's drop down to the 1-minute, and on the 1-minute, if I replay market, you guys can see we do get a balanced price range now. As you can see, this is our second fair value gap overlapping. Now it is 9.56 when the fair value gap was formed, 9.55, and here is 10, the start of our kill zone. So now we are simply going to mark out the 50% mark of this and place our limits for our buy, as we did take liquidity to the downside. Now let's go for 10. Okay. And as for targets, now you do want to place your stop loss below the swing low. As I said, do not make your stop loss too tight. And target opposing liquidity with a minimum of 15 pips. Now This could be your first take profit, and this would be perfectly valid right here. However, I do partial on my trades, which lets me target a bit higher than usual. So I did end up targeting this significant high right here. So I'm going to play out the trade for you guys, and you guys can see for yourself. Boom, we do get triggered in right here. And you do see market consolidating a little bit before market shoots up. So we are barely in any drawdown, by the way. If I measure that for you guys, that's about 3 pips. So let's play out the trade again. And as you guys can see, take profit 1 would have been hit, and take profit 2 as well. And there we go, take profit 3 for a final of 25.4. Now if we do play out market, you can see it does run a little bit more for about 36. Could we have placed a take profit here? If I go into the 5-minute. Now what would you have closed? You could have closed off this, but this is not as obvious as say this high right here or this high right here. So it's an unrealistic take profit. However, it did run for a nice 1 to 4.7 if you were to close. However, I don't think most people would be able to close at this point right here. So we'll leave it right here where we did close, in fact. So quick recap, guys. It is so simple. Liquidity sweep to the downside. Now we know we're looking for longs on the market. We're looking to buy. We do get a market structure shift right here where market moves up with displacement. As you can see, we're getting a bullish candle, bullish candle, bullish candle, bullish candle. The body of this candle closes above the high of this candle. We move with displacement. We move with a lot of volume, showing that signifying that market is having a change in momentum. As you can see, we are starting to move bullish now. We're starting to move bullish. This confirms that market wants to move bullish for us. So we do get a balanced price range right here, which we do enter off at the 50% mark, and we do target opposing liquidity. So it's as simple as that, guys. And thank you so much for watching. This is my second silver bullet video. So if you guys still do not understand, make sure you watch my first video. Thank you guys so much for watching. Make sure you like, comment, and subscribe, and check the my link in the description for my passing challenge service. So I'll see you guys next time.